we introduced the topic of market structure, right? And which is the introduction to technicals, right? And remember, I said there are four things that we pay attention to, when we are running our technical analysis part of trading. The first thing is you want to understand what the market structure is. I'll not go over what we learned, but I'll just brief what we learned, right? We said there are three ways the market moves. Is that either an uptrend or downtrend or a ranging market? And it is either you are looking to join in the trend or you are looking to trade the opposite of the trend. So you're either looking to join a trend. If the market is on an uptrend, it's either you're looking out to continue in that uptrend movement, or if it was in a downtrend, it's either you're looking to continue in that downtrend movement, or if the market was on an uptrend, you wait for a reversal concept for you to now trade in the opposite direction, right? And we're now going to proceed from today, right? So if the market is on an uptrend, right, we look for the concept of what we call a double break of structure. Not a single break of structure, but a double break of structure. Because a double break of structure is a more confirmation of the market going in that particular trend. Now, what's a double break of structure? Or how do you identify a double break of structure? Let's take for instance, maybe market was let's say market was on a downtrend, and then maybe it started pushing up. Let's say it started pushing up. Now, let's say we have something like this, for example. Remember,
I can't see your screen, no.
Can you guys see my screen?
I cannot see your screen.
Oh, sorry. Thought I was sharing my screen. Sorry, guys. I thought I was sharing my screen. All right, let's continue. So remember that we are looking out for the concept of joining a continuation trend. And for us to join a continuation trend, we need to look out for the concept of market structure, double break of structure in the market. A double break of structure is when the market takes out two key zones or two key levels, right? So in this example, for this example here now, we're seeing markets going to the upside, right? And then let's say we see something like this happen. Now, let me explain this now. Can you see this chart clearly? Now, market is going to the upside, right? This was a downtrend. This alone is a concept of reversal. We'll talk about this. But right now, we're seeing markets ranging to the upside or going to the upside. Now, we want to join this uptrend. We are to look out for what we call a double break of structure. And like I said, double break of structure is when the market takes out more than one, not just double break of structure, it's also a multiple break of structure. A multiple break of structure is when the market takes out more than one key levels, right? So here now, this is a single break of structure here. Remember the previous class, I taught you guys, or I showed you guys, about break of structure, right? So that's a single break of structure. This is also a single break of structure. And this is also a single break of structure here. This is not yet a multiple break of structure. Now, the moment that the market has taken out this high here, this is now when we have what a multiple break of structure, because it has not just taken single break of structures here, but it has also taken out this recent high. This is now what we call a multiple break of structure. So this is the concept for joining a continuation trend. If you want to join a continuation trend, I've asked this question. I'll ask this question. The concept that we use to join a continuation trend is the concept of multiple break of structure in the market. For example, this now is now a multiple break of structure. If we were to enter this trade, we'll enter because the market has given us the concept of continuation. The moment you guys can still hear me. So
I hear you
the
now.
moment market also takes out this order high here, we also have a multiple break of structure, right? If market takes out this other high again, we have multiple break of
Mm.
structures. So the multiple break of structure concept is what you join a continuation trend. Let's say the market, let's say maybe you missed this particular structure here. You missed out the entry here, and the market still goes ahead and does something like this. This is also another multiple break of structure that you can look out for to also join the trend. This is also another multiple break of structure that you can also use to join the trend. Are you guys following? So this is the concept of um multiple break of structures. Now, mind you, don't just look out for only multiple break of structures. This class, there are three other topics for there. So there are other things that you have to also look out for before you go ahead and take a trade or look out to enter, which is your liquidity, your POI and all of that. Also your directional bias. So you don't this is not just where it ends, but this is the concept that you use to join a particular trend. So this is for an uptrend, right? Let's look out. I'll also give examples, real examples in the chat. Let's also look out for a downtrend, for example. So uh let's say market was let's start from here, right? Let's say maybe from an uptrend, the market started reversing. So now, for example, in this particular chart right here, this example right here, this example right here, you can see that already the market is ranging to the downside. Now, the concept that we use to join a trend is what? Multiple break of structure. In this example, the market is ranging to the downside, and we are looking to continue on this downtrend. So we have to look out for the market taking more than one zones, right? Now, now, this particular market taking out this particular low is what? A single break of structure. This particular low is a single break of structure. But the moment that market took out this other low, we have what we call a multiple break of structure, right? That's why, I mean, of course, this is line, but that's why the market is able to react from here and continue pushing. Now, let's say you missed this particular area here for your multiple break of structure entry. You wait for another multiple break of structure again. Now, this one is a single break of structure, right? So you need to make sure that the market is not just taking out one. I don't pay attention to single break of structure to joining the trend. I pay attention to multiple break of structures, right? So this particular one is a single break of structure. I will not, pay attention to this. I will pay attention to when the market has taken out more lows. So if the market goes ahead and take out this other low here, so let's say something like this happened. Now, remember, this is a single break of structure. But now, the moment market takes out this low, this is a key level low, right? Market has taken out this low, took out this low, and also taken out this low. This is your multiple break of structure. Now, this is now what I'll now look out for to now keep continuing or to keep joining this trend. Let's say you miss this one, you can look out for the next multiple break of structure, to look out for in continuing the trend. So for you to keep joining the trends, you just keep looking out for multiple break of structure until you have met your final target. Now let's give an example. I think at some point on USD JPY, um, you know, let's give an example. I think there's a trade one time, I think last week or so, was from multiple break of structure. Let me see if I can find it. Oh, so yeah, I think this is it. So, yeah. So this particular, I hope you guys can see my screen. So
Yes.
this particular, um, this particular entry here, this entry I got from here. Now, what happened in the market? You can see the market was, it gave, first of all, it gave a concept of reversal because it was on an uptrend. You can see the trend. I drew the trend line. It was an uptrend. It gave a concept of reversal around here, of which I caught the entry. I'll teach you guys the concept of reversal as well. Now, if let's say I miss the entry, concept of reversal entry, the next thing, since I know, okay, the trend is now bearish or the trend is now on a downtrend. Now, before it gets to the final target, which is still way below, I still have opportunity to join that trend by looking out for multiple break of structures. Now, let's go ahead and spot multiple break of structures on this trend. So, for example, here, you can see a break of structure here. You can see a break of structure here. You can see a break of structure here. And we can also see a break of structure here. So you can see now, market took out this low. So I didn't just pay attention to this low, but I made sure that before I joined that trend, the market took out multiple lows. So it took out this low and also took out this low here. Just like that example I showed you guys on the line graph. So the moment that market gave me that concept, I was, more confident to join the train. But before I did that, I made sure that there was liquidity, which is inducement, which I'll also teach you guys, which are other criteria for you to, make sure that that trade is valid. So it gave us inducements, and then I picked my entry. You can see, but before I took this trade here, before I continued this downtrend here, I made sure that there was a double break of structure and I marked it. Now, let's also, see. Let's say you still missed. I still caught another entry here. Let's say you still miss this entry here. Same thing. Look for the concept of continuation again, which is double break of structure. And after the trade triggered, it took out this low here. right? This is the first low, which is this a single break of structure, and it also took out this low here, which is causing a multiple break of structure. It gave us our pullback, which is our inducement, and this pullback here, and there was a breaker block entry, sorry, another block entry here, which was where I caught that trade from. Now, let's say you still missed
Sir, I have a question. Sorry.
yeah, all right, go
Sorry.
ahead.
Sorry about my background. So
Can
the
you
thing
can you
is
speak
this, you
loud?
said,
I can't really hear you.
can you hear me now?
Yeah.
Okay, sorry about the background. It's quite noisy. So so after you wait for like your double break of structure, you have to wait for a pullback for an entry, right? Or how do you
Yeah,
do it? Because
it's 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 something I'm going to teach you guys. Like I said, there are other criteria before you enter. But first of all, you need to like know your concepts. I don't know if you understand what I'm saying. There are other
yeah, I guess
criteria.
I
It's not just when you just say a double reconstruction or you just rush and enter. There are other things you need to see the markets give you before you enter, which I am going to show you guys. But I'm just introducing you to the concept of joining a continuation trend or taking a reversal. I hope you understand. I hope you're following.
yes, sure.
All right, cool. Okay, so now let's go to the concept of reversal. Let's go to the concept of reversal. Now, the concept that we use to trade a reversal market is what we call market structure shifts. That's the concept that we use to trade reversals, right? Now, what is a market structure shift? A market structure shift is simply an indication that the current trend is about to end and a new trend is about to begin in the opposite direction. So if the market gives you a market structure shift, that is to say that that particular trend is coming to an end. So if the market was on a downtrend before and it gave you a market structure shift, that means that that downtrend is about to end and an uptrend, which is the opposite trend, is about to begin. If the market was on an uptrend and it gives you a market structure shift, that's a indication that the uptrend is about to end and a downtrend is about to begin in the opposite direction. Now, how do you spot out a market structure shift? Now, the most important thing first is that you should know the structure of the market. You should be able to identify or to mark out your structure. Now, this is how the market moves, right? Like I always say, or like I said earlier, the market moves in three ways: uptrend, downtrend, or ranging. But we pay attention mostly to an uptrend or downtrend market, right? Now, you always want to know that you always want to know how to be able to mark a higher high and a higher low for an uptrend. Now, mind you, first off, the ideal pattern for an uptrend is higher highs and higher lows, right? Now, mind you, you should always make sure that your higher high, your higher low needs to take out your higher high for you to like for that move to be like for that trend to be in an uptrend. Let me give an example right here. First off, right? This is a 1 hour time frame. This is what? This is a low. This is a high. This is your higher high. This is your higher low. Now your higher low needs to take out your higher high. Remember, this was the last high. This is the last low. The last low needs to take out this last high and give you a new higher high. So this is the last low and it has taken out this last high. So you now have a new higher high here, right? Or you can even see here. You have a new higher high here because there's also a low here. Or no? Now that's the thing. You have to actually be smart, or you have to know like the pattern very well. I would have easily called this my low, but I said no. Why? Because there's a low that's lower than this low, and in an uptrend, it's like there's nothing like a low lower than a low. It's always a low that's higher than a low. Like this low is higher than this low is higher than this low. The next low should be higher than this low. There in no circumstances should your next low be lower than this low. So in this case, this is our recent higher low, right? Now the market took out this higher high. This is now the new higher high that is higher than this high. Now, after it gave us that higher high, where's the last higher low? This is the last higher low. Now you need to make sure that the last higher low also take out the last higher high. And this is the market taking out this last higher high. And this is where it ended. It gave you a new low, right? So this is your new lower low. So if you want to draw this pattern, this is how you draw it. Higher high, higher low, higher high here, higher low, higher high here, higher low, higher high here, higher low. Where's the next high? This is the next high here. Higher high here, higher low. Because your low, the current low should always be higher than the previous low. Because that's how an uptrend pattern is. So this is your next low here, right? You just need to know how to draw your pattern. This is your next low. Now you took out this high, this recent high here. This was your recent high. This is your recent low. Now it still gave you another higher low. So you can see this is the normal pattern of an uptrend. And then higher high, and then a higher low. So this is how your uptrend should be. Just know how the pattern is and know how to draw your lines. If you want to draw your lines, right, you can start with drawing your lines just so that you can know what you're doing. So we are still dealing with the concept of reversal, but I wanted to make sure that I really teach you guys like how to be able to know or draw your structure, right, in the market. Same thing with a downtrend. You always want to make sure that you're really getting the pattern for a downtrend. The pattern for a downtrend consists of lower lows and lower highs, lower lows and lower highs. You want to make sure that your lower high will always take out the current lower low and give you a new lower high that is lower than the previous lower high. And then your current lower high should take out the lower low to keep maintaining that downtrend. So let's see for instance here. This is your lower high, right? Give you a lower low, give you a lower high. Now your lower high should take out the current lower low. So we can see it here. After I give us that lower high, took out the lower low here. Give us a new lower high that should be lower than the previous lower high, because that's how the downtrend pattern is. And then you have your lower low, you have your lower high, you have your lower low, you have your lower high, you have your lower low, you have your lower high, you have your lower low, you have your lower high, you have your lower low, right? Can you guys see how like I got the pattern, right? In the sense that it now started, a new trend, and it even matched the one I drew before even drawing this. So you always want to know your structure. Now, the concept of market structure shift. How do you identify a market structure shift? Let's say, for instance, the market was on a downtrend, for instance. And remember, I've shown you guys the pattern for a downtrend. Now, let's say something like this happened. Let's say market gave you your lower high and then give you a lower low that now eventually took out this lower high with a body, not a wick, a body. This now becomes a what? A market structure shift, because remember, this is not how the pattern for a downtrend is. A downtrend would have given you a new lower high and would have continued like that, just like other scenarios. But the market giving you something like this, let's say as the last low took out the last high, that's now what? A market structure shift to the upside. Now, if it closed, if let's say it did not close with a body, but it is the wick that extended, that's not a market structure shift. It needs to take out that particular level with a body. right? That is when you now confirm it as a market structure shift. So now this is what a market structure shift is, and this is a concept of a reversal, which means it literally is an indication that this downtrend is about to begin and an uptrend is about to start. And then you see the market doing something like this. Um, you see the market doing something like this, and then to start ranging to the upside. So this is only when you take a trade in the opposite direction, when you see a market structure shift in the market, right? For example, let's give let's give an example here. So now, can you guys see this particular let's use this for example. Remember, the market was on a downtrend here, right? This is a low, a lower low, this is a lower high, this is a lower low, this is a lower high. I think they're even equal in this case, right? Now, this is the last low, and this is the last high. This last low created a new high, and it gave us a low. But this low is not lower than this low. So we need to make sure that this last low take out the last high. And when the last low take out the last high, this is actually when the last low took out the last high. So this is your market structure shift here in this scenario. I'm just giving an example. And you can see that as the market did this market structure shift, you can see how the market started ranging to the upside after being on a downtrend. So this is your market structure shift here. And you can see that after it caused this market structure shift, you can see that that's when the market started moving up. Now, after it caused this market structure shift, this is the inducement right here. I'll teach you guys about all these ones. And that's why the trade actually, or the market actually triggered from this this breaker block here. Now, this is a typical or a clear concept of a market structure shift, right? Can you see that it's only when this market structure shift occurred, that's when the market started, taking the opposite direction. So for your reversal, or for the concept of reversal, make sure you use your concept of market structure shift. Now that's a downtrend. Let's give an uptrend example. Let's say the market was ranging to the let's say the market was ranging to the to the upside, for instance. Remember how your structure is for an uptrend: higher highs and higher lows, higher highs, higher lows, higher highs and higher lows, higher highs and higher lows. If someone should like take a screenshot of this or something. So now, this is your pattern for an uptrend, right? Now, the moment market gives you something like this, maybe the last high for this uptrend took out the last low with a body, you now have your market structure shift. This now becomes a market structure shift, because this is an indication that this uptrend is about to end, because the last high for this uptrend has taken out this last low, which is not supposed to be so for an ideal uptrend. And then you will start seeing the market, giving you a pattern like this, and then to start ranging to the downside. Then you can now start looking for your joining continuation entry, which is double break of structure, for you to keep trading in this downtrend direction. Right? Now let me see. This class is about to end, but I think after the Zoom timer ends, we'll have to join again. let's look for let me see if I can give an example for a market structure shift in the upside. What pair am I going to use? What pair am I going to use? Okay, I think here, right? This particular trade right here, this trade right here, I think it was from a market structure. It was a market structure shift, I can remember. So first off, gold was USD JPY was ranging to the upside, right? Let's see the trend. You have your high here, you have your low here, you have your you can still say this is your high and this is your low. You have your high here. Now this last high here, did I see this trade on? Yeah, I think so. This last high here took out this last low. And it took it out with a body. You can see the body closed below this low. So this is now my indication for my market structure shift. Let me use 2 hour time frame. Let me see if this is more clearer. I think it's more clearer on 2 hour time frame. Yeah, I think it's more clearer on 2 hour time frame. So um this was the last low in this particular uptrend. This was the last low that was made. And then this was the last high. Now this last high came and took out this last low. Eventually came and took out this last low. He tried with this particular candle, but this candle closed with a wick here. It didn't take out, remember, see our last low here. This is our last low. So you know that for your market structure shift to be valid, it needs to take it out with a body. And this is the candle that eventually, that's the candle. This is the candle that eventually took it out with a body, this particular candle here. This is the candle that eventually took it out with the body. This is now what caused the market structure shift. Now, remember there are other criteria which I will say. Now, this other block here is now what made this point valid as my entry. This was my liquidity here. This was my other block. That's why I picked this entry from here. And you can see the main thing here is that you can see that after this market structure shift occurred here, you can see that the market now started ranging the downside. Can you see? Now, real quick, there's a trade I dropped on USD, sorry, GBP USD just before this session ends, about to end in 3 minutes. There's a trade I dropped on USD. Now, that trade is from a concept of market structure shift as well. Firstly, you can see that the market was ranging to the downside here. Now, there's also what we call directional bias, which is the last class. But that's like what is very, very important because it's not just any market structure shift that you just take and trade in the opposite direction. You need to know the directional bias of the market first. Now, there was a market structure shift here. First off, you can see the trend. You can see your low, your high, your low, your lower low, your lower high, your lower low, and then you can see market taking out your last lower high, causing a market structure shift to the upside. So this is where your market structure shift is, right? Now, this is your liquidity, and then that is why the main thing is that's why I'm picking this point of this other block here as my entry. Why? Because of the market structure shift that occurred here, which is meant to reverse this trend that was on the downtrend now to the uptrend. But you can see even as the market structure shift occurred, the market started moving to the upside, right? But it's still going to keep moving to the upside. So this is what you need to know. You need to know the concept of joining a continuation trend and the concept of taking a reversal. And like I said, before you start taking trades or doing analysis, you need to wait till we have completed all the classes on technical analysis, because you cannot just understand only this one and then go ahead. There are other things that you need to put in place before you now start taking, trades proper. So you need to wait for the class to completely end so that you grab the full knowledge of this particular strategy. So let me know if anybody has any questions real quick. Let me know if anybody has any questions. I think from our next class, we'll move into liquidity. From our next class, we'll move into liquidity. This is all for market structure. Any questions? Someone said you didn't share. Any questions? Class is about to end. All right, then I'll drop the recording in the group so that you can rewatch, or I'll send it to your DMs so that you can rewatch the recording, and you can, you be more to be more understandable before the next class. So see you guys on our next class, and if there are no questions, good night. You can still chat me in my DM if you have further questions.